Well, it comes as no secret to most or anyone that Greater Victoria is one of the most expensive cities in Canada. That's the price of living on an island, for one thing. And if you have noticed that your paycheck doesn't go quite as far as it used to, you're not imagining it. From the rising and wildly fluctuating price of gasoline to heating bills and feeding your family, it seems the cost of just about everything is up. As CTV's Aaron Glazier reports, inflation last month hit its highest level in 3 years.
Great Expectations isn't just the title of this classic novel. Analysts were hoping Canada's overall rate of inflation would fall this month. Instead, it rose. It's up to 3.2% in September from 3.1% the month before. That has many of us worried.
Whether you have money or you are really on a budget, I think people are really feeling a pinch and are much more conscientious about what they're buying.
From luxuries to necessities such as food, clothing, and gas, having to shell out more for everything has people spending less.
These things rise, that is a concern, and we are sort of seeing reasonably large increases in commodity prices and gasoline prices. You've noticed in Victoria have been going up with a lot of volatility.
The inflation rise is well above the Bank of Canada's target of 2%. The biggest contributors, energy costs up 12.5%, gas more than 22% from this time last year, and food up 4.3%. But what has analysts most worried is the jump in the core rate of inflation. The core rate doesn't include volatile items such as gas and food. It includes more basic things, pretty much everything else you would spend your money on. And it's at 2.2%, its highest level since 2008. All those numbers could make your head spin, but the bottom line is that for the near future, you'll continue to spend more on basic needs, and interest rates aren't going to drop. And when it comes to those historically low interest rates, most experts don't expect the Bank of Canada to raise them once again next Tuesday. However, they say we may see a rise in the third quarter of next year. Not everyone thinks we need a rate cut. Some people remember the early 80s when rates were as high as 14%. They're just happy to hold the line.
The rates are so low, they've got to raise them quite a ways before they affect too many people.
You know, we could say the inflation, we need to raise interest rates to try and dampen those forces that are putting it up, but that would dampen economic activity, and that's the balance that the bank has to play.
In an economy that is still recovering from a recession, today's inflation increase, however small, means everyone is likely to proceed with caution and wait for what lies ahead from the Bank of Canada next week. Aaron Glazier, CTV News, SAANICH.